Alright everyone, here we are with ticker symbol INUV. And before we jump into this chart, I want to say welcome to all the first time viewers and investors. Welcome to the channel, Invest for Tomorrow. And I want to quickly announce that I have a Twitter account. The link is down below in the description. You can join me there for any notifications you might miss here on YouTube. You might find them there. And also stay tuned till the end of this video because I have a ticker symbol you won't want to miss. This ticker symbol has been downgraded by Analysis Ratings, and I believe this is going to be a temporary pullback. We're going to look at some important support levels and the chart overall, and which ticker symbol you're going to want to add to keep on your radar. So stay tuned till the end for more information on that. So INUV stock has moved sideways. Not much movement today, so I want to point out some things. Our support slightly changed, which is pretty important, but our resistance didn't change by much. So yesterday's resistance up here at 182, very important to keep in mind moving forward. So you definitely want to write that down if you didn't watch yesterday's video and you're the first time viewer coming across the video and the channel. Definitely keep that in mind. And moving forward, up here is the next point, 210, and then the highest point, 236. Now, on the lower spectrum of things, the most important one is 138. And the second most important is 146. We're currently at 165, and the stock is doing really good job at holding itself up within this channel. We've talked about it in previous videos. Once this started and kind of leveled off, we want to look and see if it continues in that direction, right? The up and down in this area, and stay within this channel here, not going any lower, not going much higher. That would show some healthy signs of consolidation until the next catalyst that will make this stock run up. This was a big run, but the fact that it ran up from 60 cents and some change all the way up to $2 and some change, and it's holding itself up above this point right here, very, very important to keep in mind how well the bulls are holding this up. So a lot of people are probably long on this one, and just some profit taking and uncertainty kicked in on some investors that got in on this one pretty low or anywhere around the middle, and they wanted to take profits. And I guarantee, or almost can guarantee, right, because that's not exact, that anyone that got out held some position from way down here or got back in on some of these lows here that you see reaching into this stock because they're still feeling bullish moving forward. So we want to watch it carefully. And I want to change that word guarantee. Guarantee is a pretty bold statement, but I can almost guarantee. Let's go ahead and say almost, because this stock has been bought by Vanguard in large amounts, and I can only imagine the institutional investors jumping in even more sooner or later onto this one, especially with the technology and services that it provides. So let's go ahead and see here our support. Our support here is right here at this point at 156. If that gets broken through, we need to watch this carefully and see how quickly the stock is moving to newer lows. And like I said earlier, we have other support levels to watch, which is 146, a 10-cent difference, to see if the bulls are trying to reappear and bring it back up, or are the bears tearing this one down fairly fast. Now we're currently at 165, and the 50-day moving average is 166. You want to keep that in mind. 166, when we're below it, we're in bearish territory. When we're above it, we're in bullish territory. Now, it's in tug-of-war zone. It's a difference of 1 cent. But right now, what you definitely want to look at and pay close attention to is our lowest point of the day. That's our current support level at 156. Now, on the other hand, we have our resistance, and that's 173. The bulls need to break through this to maintain this momentum and hold themselves up in bullish territory to pull further away from the 50-day moving average and reach newer highs. So I want to emphasize that one more time. 173 is our resistance and needs to be broken through by the bulls and turn into a support, so this can pull up to newer highs, new resistance levels, and the next point would be 178, and the highest point recently reached was 182, and that's definitely where the bulls want to aim towards. But before getting there, they need to break through 173 and turn that into a support to reach newer highs and new resistance levels deeper into bullish territory. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button to let me know you watched this video. Stay tuned till the end, because the ticker symbol I'm about to share with you guys, you won't want to miss. You definitely want to keep this one on your radar moving forward. So for everyone that has stayed to this point in the video, the ticker symbol I'm about to share with you guys is a ticker symbol that has been pulled back and down since earnings date, and also analysis ratings have been reiterated on the downside. So it's being pulled down by analysis ratings, and also since the date of earnings, there's been some sell-off. Now that could be some profit taking, uncertainty, or that analysis ratings is having some effect on the stock. That is why this is one to definitely have on your radar and keep on your watch list, because it's a proven and well-known company, and it could be a temporary pullback. This ticker symbol is INTC. Once again, the ticker symbol is INTC, and that is Intel Corp. Now, one thing I do want you guys to keep in mind is the fact that it does have room to pull down even more. I'm not saying that this is the bottom, but it's looking like it's holding itself up. So we want to watch this closely. Now, if you're really going to watch this closely moving into the next coming days and weeks, one of the points I will look at is down here at 51, right? From where it currently sits at 55. The next point would be down here at 49. And then I would just look down here at the very bottom, since way back here at 45. Now, it hit other lows throughout the year, but I will look at it from 45, 49, 51, and then where we're currently at, to kind of just dissect this chart as much as possible to have some type of idea of how it's reacting within these levels. But this is definitely one you want to have on your watch list moving forward, because this could be a temporary pullback. And even if it goes lower, it's going to be a temporary pullback, because if we look at the market cap of this company, it's in the billions, right? And for the price that it is, the average volume is pretty high, you know, and today's volume was not too bad either. So, I mean, there's a lot of movement going on here. And when you look at their net profit, I mean, it's pretty reasonable. They're still with room to grow, and there's just so much potential. And this is a proven company. Now, it took a big hit back here around August, and even here in October, once things started to get a little bit more official that they were no longer having their largest account, which was with Apple. Then it brought itself right back up. So I believe this is a temporary pullback, and there's two ways to look at it: either an opportunity or an opportunity to stay away. But usually these temporary pullbacks are opportunities. I'm not here to tell you guys to buy, sell, or hold any position on Intel Corp or INTC stock, but I am here to enlighten you guys on stocks that are looking like an opportunity due to temporary setbacks, either profit taking after earnings and uncertainty because of the analysis ratings. This could be the bottom here, but I'm not saying it is. It could actually continue to pull down. And then we have our other points to look at: $51, $49, and $45. If it breaks through all of those, but beyond 45, we could see newer lows. But I mean, like I said, that's when you have to reanalyze what's going on. So this is definitely one to keep in mind. And if it consolidates within this area, it could mean that there is no longer a newer low. That was as far as it was going to go. But I said it could mean that. That's why you need to watch this carefully. But at the end of the day, INTC is a well-known company, large market cap, and revenue is coming in every single quarter for this one. I mean, you could just see it. It's been growing every single year. And when you go to quarterly, I mean, it's just phenomenal. They're in the billions of revenue and net income. So very interesting stuff for this to be pulled down like that significantly. And with all the AI and these chip makers and all this opportunity of innovation, INTC is going to get a market share of that regardless. So I could see this having way more room in the upward direction regardless of how low it goes. So something to keep in mind. As always, thank you guys so much for watching, and let's make some money.